Mihir Vora, CI of Trust Mutual Fund, is standing by. That's a beautiful skew over there. Advances to declines. Short sellers are going to be having a tough time today. Mihir Vora, very good morning to you. We've had a very serious couple of days, 2-3 days as Indians. But what has gone through or come out clearly from an equity perspective, because that's what we cover and live and breathe, is the faith in Indian markets. Today, a resounding, thumping, backing of that as well.
Certainly, but this is not new, Tamana, because we saw even after April 22nd, when the incident in Pahalgam happened, we did see not only the locals continue to be buyers, but even FIIs continued the pace of buying, except I think for one day, which was last Friday. Apart from that, for almost 15 consecutive days, we have seen the FIIs come in and buy. So I think the whole faith in the India growth story is back. The reason why we did see selling for 3-4 months or 5-6 months in September, etc., was because of the dollar trade, and I think that's getting unwound. And the fact that India is now being seriously considered as an asset class, with a stable currency, good macro, and now of course we have proven that even geopolitically we are able to handle anything that comes our way. Only re-emphasizes the faith in the Indian markets.
Viewers, I don't know if we can pull it up or no, but if we can, there is a post on X that Mihir Vora put out yesterday. Yeah. And maybe we can pull it up, but I'll read out for sure the opening lines of that post, wherein Mihir Vora is saying that the plan by our enemies and their proxies to discourage global companies from coming to India by painting India as a country with geopolitical risks has backfired spectacularly. Mihir, you firmly believe that this whole India has come out smelling like roses, and rightly so, from all of that's happened in the last 4 or 5 days. What I would love to know is, though, that when you talk either to global companies or global money managers who might be interested in putting money into India, maybe through your AMC or otherwise, are they sounding resolute about all of this? Because India was a low beta market, India was a high growth market, and now India is coming out as a market on which the tape didn't get disturbed in light of a geopolitical situation.
No, absolutely. I mean, I haven't spoken to anybody in the last 4 or 5 days, but the fact is that we have seen FII money coming to the country in a big way in the last 2-3 weeks. The currency was amazingly stable in spite of all this turmoil. In fact, the Indian rupee has been appreciating for the last couple of months. So I think the overall external macroeconomic situation, the internal macroeconomic situation is I think absolutely fine, with the RBI and the government going into growth mode. RBI supplying ample liquidity even during times of stress. I think it only shows the confidence that the government and the system and the retail investors have in the country, and that will rub off into FII interest, because the foreigners will obviously look at the domestics' sense of faith and confidence, and that has been reassured, I would say, in the last few weeks of development.
Mihir, I'm just wondering, for those who have been sitting on dry powder, sitting on cash, because that was a lot of the conversation last couple of weeks, what is the best place to deploy? Everything today, of course, on an up and up, but you have seen a lot of key stocks and sectors coming off their highs. Where are you finding enthusiasm right now?
See, I think the maximum, correction we saw was in the high beta names, especially the pro-cyclical names in the financials, like the capital market link plays, like some of the smaller NBFCs, etc. Real estate also was in a bit of a correction mode. We saw some of the infra and the cap goods and infra and construction companies taking a beating in the last 4-5 months. So I think the risk of trade impacted those beta and cyclical sectors the most. And if we are seeing now a sustained uptick in the market or a sustained run, then I think these segments are the ones which will again start leading the pack. Only difference is, given the developments in the last few weeks, whether the budget continues to focus on infrastructure or some of it goes to defense is something that we need to see.
Okay. In terms of banking, let's talk a bit about banking. Numbers, a mixed bag for some of the PSU banks, but otherwise private banks doing okay. Bank Nifty, of course, up 3% today. even this easing of this whole issue with Yes Bank that has come to a logical conclusion, do you think that's giving you more confidence in the BFSI space and especially in private banks?
Absolutely. Not only this, positive development, but in general, we have been discussing, as you would remember, that the only thing missing in the banking and in large NBFC is credit growth. More on the banks, NBFCs were managing in their own niche segments, but the large private sector banks, the only thing missing was credit growth, and that is something that we are hoping that will come out, come in the next few quarters. Otherwise, capital adequacy, the NPA cleaning up, that has all happened very beautifully in the last few years. We are starting with a clean slate, and as I said, the only thing that is missing is the growth thrust. And if the economy will grow at 6.5%, as is the consensus, then I don't see any reason why credit growth should not come back in the next few months.
Mihir, now we are starting to see, albeit a bit delayed, but things starting to move on sectors which were very, very quiet, right, for some time now. I think a lot of people anticipated cement to start performing. We're now starting to see price hikes of a meaningful nature in South India, at least, which is not believed to be the case. Chemical companies selectively, and at least the ones which have a CDMO presence to themselves, Naveen, Ami Organics, etc., starting to perform as well. Where is it that you believe the incremental buck is best placed at? If you were to distribute a rupee amongst sectors, how would you distribute it?
So, there are a couple of things that we must look out, and some of the positives which have come. One is, as I said, clearly credit growth in the financials is something that we need to look at.
Okay.
Because the capital market link plays will do well in any case, because there's the high beta play in the market and the market sustains. But in the banks, we need credit growth. So that's one area that I'm finding a good equation of growth versus valuations. Second event that we need to watch out, and which is very close, hopefully, is the deal with the US, because that can impact a lot of sectors. For example, if you are talking about auto, ancillaries, pharmaceuticals, some of the IPR link plays, then the deal with the US will make a lot of difference. For example, if you are saying that there'll be very low import duties on auto and on auto components on both sides, then some of the Indian auto component players, maybe not so much the OEMs, but the auto component players can tend to benefit. The second is, if we are saying that pharmaceuticals will be also part of the deal, then some of our API suppliers, some of the the generic suppliers can tend to benefit. Margins, I'm not sure, but volumes definitely can improve a lot going forward. So I think these are some of the events that we need to look at. The US trade deal is also a big deal. So in general, I would say that auto ancillaries, select pharma plays, the financials, and some of the utilities and the growth stocks in the utilities like renewables, etc. Those have also been beaten down. These are some of the pockets that we can see a lot of action. Chemicals, as you rightly mentioned, is definitely a play, because we are seeing almost 2.5 years of margin erosion because of the China factor. And now I think we have bottomed out in terms of margins. And in the meantime, companies have already commissioned, a lot of companies have commissioned a lot of capacities. So we are looking at a situation where margins probably have bottomed out in the chemical space, and we will see volume growth. So I think it's a good combination there also.
Okay. Mihir, what's the pushback here? I mean, now we've kind of aced, let's say, some of the key tests in the last few months, weeks and months. What's the litmus test? Is it a global factor which will, a lower tide which will carry down all boats along with it? Or could it be India dedicated? Maybe earnings, maybe slower earnings, maybe something else?
Neeraj, what we are seeing is that the first 2 quarters can be okay.
Okay.
The June quarter, the September quarters, it could be okay because last year's base was low. If you remember, the slowdown started in the June and September quarter because of lack of government spending, etc. So the first 2 quarters probably can carry us through in terms of YOY effect. But then we need the back-ended growth to come through. As I said, if credit growth does not come through, if private sector capex does not follow through, though private sector announcements have been good, so I'm not too bearish on that. I'm quite confident that private sector capex is going to pick up. So while announcements have been good, that needs to translate into actual on the ground, investments by the private sector. So I think credit growth, private sector capex, and discretionary consumption continuing to do well are some of the factors that we need to look at for the second half. So if that does not come through, that can be a cause for a downgrade.
I'm just wondering in terms of sectors, Mihir, how are you looking at IT? And, you mentioned in passing, but I think we should focus on it a little more. The US-China noises that we're hearing, we're still waiting to see what that trade deal looks like. And knowing both sides, they can reverse to a hostile position at any minute. But as of this moment, trade tensions easing, if US and China do come to an agreement, how are you looking at key sectors, including IT? IT on fire today?
IT, I think, is on fire because the US futures are on fire. But in IT, I'm still more positive on the mid-cap companies, which are likely to show at least 15-20% growth. But the large cap companies, even in a bull case, will probably high single digit kind of a growth situation, which, given the context that we are talking about high growth sectors in the domestics, etc., are not that positive. So IT has underperformed for quite some time. So in a day like this, you will see some short covering and stuff like that. But I don't think it's a structural story, especially the large cap IT. We'd rather stick to the mid cap IT where we can do stock picking, which have specific business models.
Okay, so mid-cap IT, but there is promise there. Mihir Vora seems to suggest, despite maybe in some cases you could argue that the valuations have become stiff now. I mean, persistent on the day of the results, I think was at 4,300, probably at 55, 56. Some of the others have moved up too. So that's an interesting one. Mihir, one question though, on defense, right? In some sense, this whole 5-6 days has brought out defense capabilities of India. And in a lot of cases, at least as per reports, completely indigenous defense, manufactured defense products used in the last 5 days and coming up trumps, right? So in some sense. So my question to you is, does this enhance the defense story in that a lot of talk was being done about how India will be able to export defense as well because of the size. Now there is proven capability and therefore maybe the export revenue for select defense companies might actually go higher.
Absolutely, that can be the situation. I think the constraint, especially for the PSUs, would probably be manufacturing capacity rather than demand going forward. So I see a lot of action happening there. I mean, you can't have a bigger proof of concept than this, frankly. So to that extent, I think we've been catapulted suddenly into the limelight about our domestic, indigenous technologies and how well we are able to integrate multiple systems, complicated systems, not only the local systems, but integrate them with the global systems. So I think it's a huge fillip for the Indian defense sector as far as proof of concept is concerned. And I think the private sector as well as the public sector companies should come into the limelight and should do extremely well as far as, getting orders from the global countries is concerned.
Favorites right now, Mihir, in terms of sectors and themes. A few days ago, we were talking about everything domestic focused because, to hedge your bets against external headwinds. Is that view also changing?
No, I think India's relative position has only improved versus the rest of the world.
Yeah.
So we continue to believe that India will grow faster than most of the developed and emerging market countries in the world. So this tag of fastest growing large economy in the world has only gotten stronger, I would say, because of this. And as I said, we just need to focus on our domestic execution, and I think the money will come in a big way for India.
Okay, focus on domestic execution is the key point over there. Thank you so much, Mihir, for speaking with us. Always a pleasure. Mihir Vora there of Trust Mutual Fund.